Hi everyone. Hopefully you are doing so great and the markets are doing well to you. If they are not doing well to you, I'm sorry for that. And if they are doing well to you, congratulations, maybe I can say. In front of you, uh, it's the one who is speaking is uh, uh, Mr. Billionaire, the among the traders, among the traders and founder of Divine Community Group. Welcome to our very first episode. This is a new series of episode whereby I'll be explaining different technical, say, I can say technical tips, different technical tips on how you can approach these financial markets. And these technical tips, they apply in all currencies. And before I can proceed with this episode, which will be available, I think, on every Friday, and this episode will be going with a name of Technical Friday. So this will be the first episode of Technical Friday, whereby I'll be discussing different tips on how you can approach these financial markets based on technical analysis. So make sure, don't forget to like this video. Make sure you like as much as you can and share to your fellow. Also, make sure you subscribe so that you can be the first one to be notified the new content when I release them. And also make sure you share. And if you have any comment, doubt, make sure you leave your comment on the comment section. So let's proceed. As all you know that markets usually move in form of waves. And these waves usually uh they move in form of higher high, higher low, higher high, higher low, higher high, higher low, higher high. In case of an uptrend, usually this is the same. Actually, this is the basic of any market. In case of uptrend and in case of downtrend, we have lower low, lower high, lower low, lower low, lower high, lower low, lower high, lower low, lower high. So when price they moves in these forms, they create liquidity areas or liquidity region. In these liquidity regions is is where we plan our entry. So price after breaking these previous highs, I mean, in case of bullish trend, price after breaking this previous higher high may retrace back to come to this region inside this region. We call it liquidity region, area where a lot of traders they think they can take their trades within these areas. So where it depends on the particular strategy that you are using. So today I will be explaining in a practical way with this pair, which is euro card. I'll be explaining what I'm expecting and what made me to do such decision. Based on this current price action, you can see in front of you here, price is moving, before was moving bullish, was moving high, low. You see, this was high, low. You see, this was high, then the price retraced back to this low. After retracing back to this low, it's like some sort of sweep, liquidity sweep. It's just a liquidity sweep. So these small structures which have been created by this price we call as pullbacks, or they are pullbacks. They are not valid structures. You know, structure, in order for a pullback or a structure to be called, or to for a movement of in order for a price movement to be validated as a structure, there are some factors which it should be, they should be met, right? So if those factors are not yet met, we call it a pullback. So these are just the pullbacks. You see, these are just the pullback. And when price during the movement of price uh let's say here price is creating some sort of pullbacks, and then the price come at this bottom over here, and then after coming at this bottom over here, price creates a candlestick, but this candlestick did not close below the previous pullback. So if candlestick did not close below the previous pullback, we call it as a liquidity sweep. You can put it in your mind is that liquidity sweep is where that by the price came back to the previous pullback. It can either be pullback or the structure to the low or high of the structure, or low or high of the pullback, and the price never closes below or above it. We call it as a liquidity sweep. So this movement which happen here, as you can see, this movement is called as a liquidity sweep. Why liquidity sweep? Because we have no price closure below this previous pullback. And if you do not understand what pullback is mean, you can go on my previous videos. I've explained it well, what is pullbacks and how they occur in price movement. So price did not manage to close below this pullback. So after price did not manage to close below this pullback, and remember that price, when it was dropping to come to this previous low of the pullback, it also created some internal structures or pullbacks like this one. Price came over here, created this pullback, and the price drop or up to here, created this pullback, and price come and sweep some liquidities, and price did not manage to close below this previously low, and price went up. After going up, price come and break previously pullback. You see over here, let me magnify or zoom in so that you can see it clearly. You can see over here. Let me delete this one. Let me delete this one. You can see over here, price, we have a price closure above this pullback level. Price before came and do what? Liquidity sweep. This was Wednesday candle did not manage to break above, to close above to this pullback, and the Thursday candle break above this pullback, and hence this is not a liquidity sweep. This is the break of the pullback, not to break of the structure, break of the pullback. So after break of this pullback, what do we want us to see when price break this pullback? Then, because I was expecting price to continue dropping below, but after breaking this pullback, I am sure, because I'm not sure, but it is very possible for price to come to mitigate this previous pullback, which created a supply zone before coming back to the bottom, continue to with the previous trend, which is already bearish, because price break previously higher, high, higher low, previously higher, higher low. So price have changed the bullish characteristics to bearish characteristics. So after breaking this previous pullback, price have created a liquidity region or liquidity area, which was this last Wednesday candle. This is the one that I've created the liquidity region. So what I'm expecting is to see price going deep below within this liquidity region and mitigate some areas below or within this area before going to the upside. So this is what I'm expecting to happen, is that price after mitigating some orders within this area, price will come directly to this area before dropping to the bottom to continue with the trend. So let's drop to lower time frame and see what is going on within these areas. Let's go to 1 hour and see. Here is 1 hour. Can you see here? 1 hour previous trend was bearish and the price have changed the bearish characteristics, and now price is going bullish. Price is already breaking structures, break of structures. The first structure, this is the second structure. The first structure was here, the change of character. The second cluster, structure is here, the break of structure. After this break of structure, price went up. After going up, price creates this pullback. You see, here we are talking about pullback. After this break of structure, price creates this pullback and going up. Then the price is coming inside within this area to see what is inside area which is not yet mitigated, so as it can go up. But remember, in order for us to validate a true higher high, we need to have inducement. So this point over here, this was our inducement, a valid pullback which creates inducement. So after price come and mitigate, or sweep this inducement, means it have already created a true higher high, which is H1 higher high. This one is H1 higher high. But after coming inside of this previous pullback, the price did not manage to close below this pullback. So instead, it has made liquidity sweep. So what will be our confirmation, so as we can take this trade to go long, or to proceed with this H1 trend? What we are expecting to see is that, if this is a valid liquidity sweep, then I need to see the price is closing above this previous candle, because this strong bearish candle was also liquidated over here. Price sweep some liquidities below this bearish candlesticks. So after sweeping some liquidities below this previous bearish candlestick, we are expecting to confirm that price will manage to move to the upside after seeing that this H1 candlestick close above this price. So after price closing above this candlestick, then we can place our orders at the previous this was not the opening, the highest price reached by the previous price. Then our entry will be here after the closure of this candlestick, and our stop loss will be below here, which will be almost 24 pips. And this scenario is what we call as a single candle order block, or single candle supply or demand zone. So after price close above this previous candlestick, will create this order block or demand zone. demand zone. After creation of this demand zone, then our targets will be over here, which will be about 96 pips, valid intraday trade. But we'll take this trade if the price closes above this level. So let's see what is going to happen next. Now it is 13:48 hours. 48 hours. So we have about 10 minutes for price to close above this price point. So let us see what is going to happen. And on the next video, we will check out how was the price played out. Okay, thank you. Have a nice day and a nice weekend. See you next week with episode 2 of Friday, Technical Friday.